travel to a lot of these global energy conferences and development discussions, it has been such a game changer. I think people now view the U.S. as actually having taken some real action and becoming a bit of a leader in terms of what's happening in climate globally. And moreover, the second point is that folks, I think, are trying to look at what is going to work here. Is there something that either they can be implementing at home along these lines, or can they themselves take advantage, or their company take advantage of the incentives being offered here? And we are, in fact, seeing a number of companies that are trying to take advantage of a lot of the incentives that have been offered who are not U.S. based or U.S. companies. So I think it's had a tremendous impact. But the paradox is that I think a lot of Americans who are not involved in the energy sector or watching what's happening with climate are unaware of this. And really, if you talked about IRA, they would have no idea, maybe even the Bipartisan Infrastructure Act, or IJA, as it's also called, people, it just, if you're not in the business, really, why would you be aware? But it has had, I think, a tremendous impact. And, to get a little bit more granular, we've seen $227 billion announced in clean tech over the past couple of years from these two acts combined. And about 50% of that has materialized already. And if we look at the impacts that, you asked also kind of what are corporations doing about this, not just from a public perspective, but what's been the impact? I think there's been tremendous interest in areas like 45Q, which is on carbon capture, 45V, which is hydrogen, looking again at what's happening in terms of transferability of a lot of these things, the fact that it's no longer just tax equity. So different groups of folks who may not be able to take advantage of tax equity can now get into the game on a lot of these incentives. And so I think we have seen a real impact. If we look at, for example, utility scale solar and wind, we've seen a 30% increase in investment in solar, utility scale, 50% increase in storage investment. So I think it really is having an impact. And so that would be one point. I think another thing we may come back to later in the discussion is workforce, right? So we're seeing job creation from these acts in what is already a tight labor market. And so I think that raises some interesting questions about how do we really drive this and take advantage kind of from a workforce perspective. So that would be my quick overview of kind of the bigger picture here.
Thanks, Kate. So the two numbers that you mentioned, those are both tax credits for hydrogen that are in the IRA, right?
Well, the 45Q is actually for carbon capture.
Okay.
And the other is the hydrogen.
Okay.
The low carbon, emissions neutral, however you want it, because it's hydrogen of whatever color. It's kind of technology agnostic as long as it's zero emissions. Yeah.
Right. So I think something that I heard Ben say while we were doing a prep is tax credits are a really weird way to spur investment into the clean economy. So Ben, heard from Kate that carbon capture and the hydrogen tax credits have been relatively motivating in spurring investment into those areas that are perhaps a little bit younger, knowing that hydrogen is not actually a young industry, but it's expanding into green hydrogen. What has that meant on the solar side?
Sarah's too polite in describing how I talk about things. So I didn't say it's a really weird way. I said making social policy through the tax code is stupid. And we do that. And this law continues that approach to the world for various reasons that have to do with deep political economy questions that, this guy here will opine on more thoughtfully than I ever could. But that fundamentally, have built-in embedded powerful interests, both because we're afraid to actually deal with taxes in this country, but also because a whole bunch of wonderful people, including those in this room, including me, who has a job because of it, right, become experts in esoteric tax issues, and therefore bankers and lawyers and accountants and the rest, provide a bulwark for supporting this way of doing our business. So that's the negative thing to say. And I will say this, right? Like, what's actually exciting about Uncle Ira, as I call it, right? So I wouldn't be a good Yale student if I couldn't argue both sides of an argument, is it is a game changer, right? It opens the door in many ways to a set of possibilities that weren't there before through a combination of financial and policy moves that together are just so tantalizing, including the tax credits, which I'll talk about for a second, but shouldn't be confused with actually solving the problems on their own, because as it turns out, both because it's a federal system, both because we have embedded 100+ years of existing infrastructure not designed to support clean energy, whether it's in transportation or electrification or anything else, right? That you're competing against commodity electrons, and you still have to solve for those problems in terms of capital and development and FERC and local T&D, and right, like it doesn't change the complex ecosystem on its own, and the relative lack of skill and capacity, throughout that ecosystem to actually successfully take advantage of those things. So those are the hard things. But here, suddenly, bright shiny ball, like there's a brass ring that is available. And I can't complain, right? There's sections of Uncle Ira where it's like, cross out the language in there and do what PosGen does, right? Or do what my friend Steph Spears in the back there from Solstice does, or John D'Agostino from IPC, right? There's folks in this room who are good troublemakers that I'm seeing as I look around, like, how do you open access to clean energy to all those who haven't had access to it? How do you make it transformative? How do you make it deep? How do you make it sustaining? And so here's the dialectical challenge, as it were. So, right, we got a system that in many ways is broken in how you enable it. Can folks of goodwill, both inside and outside government, take those pieces and put them together in a way that actually demonstrates wins of sufficient size and quantity and velocity that it can build on itself? And that's not there's no way to know the answer to that, but people respond to winning, as it turns out, right? And winning in this case isn't passing the law. Winning is actually the work getting done and the projects being on the grid. And so I'll give a cautionary tale, and then I'll end with something, happier and pass it to MK, which is like, so when we think about the positivity of the tax credits, which for PosGen changes everything we do, because suddenly in low-income communities and energy communities, there's 10% adders that make projects that were previously uneconomical. And we're a New Orleans-based company. In the Deep South, now we can do them, right? And save our customers money and actually deliver on the promise and hire folks in those neighborhoods. When I go and take advantage of the transferability market that was just opened up by IRA, awesome that a bunch of new corporates are coming to the table to offset their taxes. Not so awesome. I want 100% insurance coverage for the transferability risk that I'm taking because I don't understand this space. And so out of my $100 million that I want to raise, $4 million just went to pay insurance, and there went the savings that I wanted to pass on to my customers. So that's not an unsolvable problem. But for folks in this room trying to solve the problems, it's like, well, that's a real one. And the law doesn't solve it. The market has to figure out how to get to a better place to figure out what the right risk pricing should be. And especially then to do it for people that we actually care about serving who haven't before. So that was a lot of nuggets. Let me shut up there.
Thanks, Ben. Yeah, so building off of what Ben was just saying, we're trying, a big part of IRA is carrots to drive investment into communities that historically have been underinvested in, and also to build in new ways. Have you seen that kind of market change with your solar construction hat on, MK?
That's
Yeah,
so,
that's great.
yes and not really. So it's certainly catalytic. The money from IRA, it's definitely that, but it's not. When we look across empirically, what do we see? We see more than our entire baseload in a queue waiting. Right. That's the reality that at least the investors here know about. So that's problematic. That doesn't actually solve this climate, crisis that we're in. That doesn't address the poly crisis. That actually creates a new crisis that really, Ben is highlighting. And then when we look in marginalized communities, we don't see large, investments. We see people trying to discern what the hell is this thing, We were one of the early recipients of some of this money. People came to us, how did you get it? How did you get the cash first? Well, because we were having the conversations with the administration before they even wrote the IRA, But that doesn't give us any kudos. That's just how you deal with the government, as it were. So I think, looking forward, we're still going to be confronted with the problem of climate injustice, with the problem of moving resources to marginalized communities. they don't get them yet, even though you got great companies like Posigen that don't want to hear about your credit score. That's not how probably, I would say, 98%, 99% of folks work. Nobody's working like that. They think this guy's a kind of a fool and I don't want to say unicorn.
My daughter sometimes.
So yeah, this is nuts. Why would we even do a business like this? This is crazy. So that creates challenges. And then I won't even talk about tax. I'll leave you to talk about tax. But most countries, most folks, as Kate knows people around the world, look, why are they doing this through tax policy? You know, why is there not a coordinated national strategy for putting energy on the grid? What's going on in this? You know, Canadian colleagues, one guy who was on my team at ASU, he's halftime with us, halftime up at something called Carbon Free, which probably some folks know about. He thinks this place is like Kazakhstan. It's super difficult to do business here. It's nuts. Why would I do business in America? Renewable business. It's not really a place to do that stuff. So I think it's catalytic. It's going to be around to answer your meta question. It'll outlast the next probably couple administrations because of just the size of the money. And, we're working in all states, red and blue, purple, all shades. And so whoever comes along is not going to slow this down because it's just too big. But has it done anything for marginalized communities? Not really. I don't think. But it's catalytic, though, overall. Yes.
Kate, I want to ask you a question, if you wouldn't mind, because sort of thinking about sort of the nature of the catalytic question, as it were, like what I think of associated with all the good and the hard of this bill and the associated policy incentives is, at the very least, it focuses attention, right? And I don't mean that in a minimalizing way. I mean it in, there are both on the investment side, on the policy side at the federal, but also at the state and local level, and those that are previously saying this is too hard, now saying, okay, but I think it's worth it to keep trying. Like that's sort of how I see it. And I think of it with Solar for All, for example, where it's like money given out to states that maybe don't have any idea what they're going to do with it. The dollars are perhaps less important than the fact that they're now saying, okay, what are the things we should do to unlock it? I'm curious from a political economy perspective if that resonates with you, if that seems like it's what you're hearing as well. Because to me, it feels motivating in telling my story of, we do this, I am a fool, yep. But here, this, these windmills, in this case, Don Quixote, not actual wind turbines, right? Like, I could win, stick with me long enough to give me a chance.
I think one way in which we've seen that it's been motivating is basically around the cost structure of some of these technologies and specific projects that specific companies or community solar, are trying to get off the ground. Because MK, during our earlier conversations, you made the point that these adders and everything are very complex, right? And you're absolutely right. But if you take the example, for example, of renewable natural gas. So if you have a landfill and you may already be capturing the biogas, but now you need to actually put in the tech that's going to bring that to RNG, which is the right spec to go into the pipeline to be used for fleets or to be used for home heating or what have you. And this, again, is, 0.5% of natural gas demand in our country. So this is very, very small yet, right? But right now, if you're able to have your project qualify for the local content requirements and for the wages and apprenticeships, which can give you as much as a 30% credit, for example, another 10% on, various other adders that come in. If you are one of those very few that can tick all the boxes, then you can actually tally that up to about 50% of your cost, which still leaves renewable natural gas more expensive than the natural gas that would be coming, through Henry Hub pricing to the different pricing nodes. But it does actually take a chunk of the cost out, right? So I think in certain projects, we actually are seeing, like hydrogen, for example. You can get pretty close under the right conditions to produce green hydrogen and compare that to the cost per unit produced for gray hydrogen, for example, in some cases. The problem is there's not yet a huge hydrogen market, right? So this is all still very nascent. But maybe I should turn it back over to you to talk about the ins and outs of some of these adders and how complicated it can get. But I think in terms of your question, Ben, the impact that we're seeing on cost reduction and trying to bring some of these new technologies to a cost level that is at least commensurate or potentially competitive with existing options I think people have noticed that. Yeah.
It's I agree. It's interesting to see how the tax credits play, especially with people that are new to the market. I mean, on the EPA Solar for All awardee call, they said that there were awards going to 25 states or territories that had never had a solar program before. And how do you help those locations to launch these markets that they don't have any experience with from the state staff level? Their utilities are, perhaps unfamiliar with the requirements that it will take to interconnect all of the capacity. And that's for a very known technology. We're here at an innovation conference. Most of what the IRA is incentivizing is proven commercially available technologies. But I'm curious, is there anything that you see in the IRA that's specific to entrepreneurs, either new business models or new technologies that this crowd might be particularly interested in?
Well, so on that, I mean, that's kind of my other hat is sitting on the board of Black Owners of Solar Services. Really, it's been catalytic for. We worked really in a partnership with DOE to get catalytic money, about $6 million, to target what we call adjacent enterprises. So. Folks that not in the renewable energy business at all, but could easily engage in it. Folks that were general contractors, folks that weren't doing anything related to solar in our case, but are interested in it. So there are resources for this, and we're now on our third class of adjacent industries. And each class has been about not huge, about 50, contractors, small, medium business owners, and coming into the space. So I think there is a space for this. It's growing, and just the size of the money has brought attention to folks, and I think it will continue to happen that way. That, however, it basically makes this country normal, right? So we don't get to clap for that. That lets people say, oh, finally they're tuning in this place. What people have been doing for now, really about a decade, and a decade plus in the rest of the world. So that's a good thing, but nobody claps for it.
I'm just an upbeat guy. So, MK, I love that response. Let me take it in a different way, and to me, co-opting your role a little bit, Sarah. Like here, I'd be curious what folks in the audience have to say, both investors and developers and others, because boy, I don't know the answers to most of these questions, and I don't claim that I do. I see from an innovation and entrepreneurship perspective, like a fundamental disconnect between what we're trying to do from a global scale, from Kate's perspective of being able to actually, how do you build a big hard infrastructure that competes, whether it's against commodity electrons or commodity gas or whatever, and moves gray or brown to green, right? And you've got a ecosystem not transformed by Uncle Ira, that is what it is, that says early stage is risky. Here's the return profile I need. Here's the portfolio I take. Expected returns up here. Expected yields up here, right? Double digits isn't enough, right? MOICs of whatever, pick your number, 2x and above, 3x and above, right? As expectations, right? For any given underwriting of a entrepreneur of choice. And let's assume there's actually new innovation as opposed to just a small business trying to build something in any of our fields, right? Trying to get access, trying to be a player in the, right? So let's put aside this is boring. There's an opportunity though, just to build a solid business, right? So There's a cost of capital expectation associated with the risk profile that is there, right? And what actually we're trying to do is have everybody in our space play at infrastructure-like returns, right? Whatever you call those in today's current, interest rate environment and macro environment, right? So not to be too technical about it, but right, like that's a structural disconnect working through that makes this ecosystem struggle. And when I look at this crowd or others that I sit amongst, it's like, okay, IRA does some of the things to change cost of capital for some players that can access it and changes some fundamental cost structures as well. But like the mentality of those who provide the trillions of capital on top of the billions needed for this. Okay. I mean, like, I'm asking this as a question. This is not me saying anything smart. It's like, okay, so that disconnect is actually what you need to solve to get things from here to here. And I don't know. Like, smarter people tell me the answer.
Well, I was actually going to ask you for the answer, so I hope you don't mind if I put you on the spot. But in your earlier example, you were talking about one of the projects and then having to fund the insurance aspects of that, right, which takes a chunk out of the capital you would have passed back to your project partners and folks that you're working with. What are some other examples of that? Like, if you get very granular in the projects that you guys are putting together, and I'm thinking kind of from an EV example, right, working with folks in a previous role who had been kind of the interface between the utility and the municipal bus fleet that needed to get charged at the end of the night, right? They found out a couple of interesting things working with those folks, which was, number one, you have to be aware of the American with Disabilities Act in terms of where you place your charging infrastructure. Point two, you have to make sure that if you have a union that includes the drivers of the buses, the union job classifications allow for charging in the bus. So a lot of these things that maybe wouldn't have been covered in big legislation or might not have been widely known, you kind of find out in the middle. So I was going to ask you if you can give some examples of a few more things like that it's not legislation that solves it, but maybe it's the local level or it's the municipal level or it's the community level awareness of building, I don't really like the word ecosystem, but building that understanding and collaboration that helps identify those issues and find a solution.
Well, I went to what used to be called the Yale School of Forestry and Environmental Studies, so I love the word ecosystem. It's how I think, I'll give one example of that because I actually love that prompt. And again, it's, welcome collective wisdom on this one. So like, the insurance example just drives me insane because it's like nobody wins amongst the players. It's mispriced risk. And yes, insurance should wear it. That's at least better than a bank wearing it, but it's still terrible. Here's one that's really interesting that, I'm struggling with at the moment. And I'm looking at certain friends in the audience who I think have made more progress than me, which is, so part of the challenge of IRA, and you just said it with sort of the ADA piece or the union piece, like these are really fascinating call outs. You pass a bill through reconciliation on the backs of a deal between, Senator Schumer and Manchin at the 11th hour. I mean, God bless, right? Like, it's amazing that it happened. It's a miracle. If we don't start and end every conversation about this thing with just like, our politics are effed, but like, God, thank God they did something. Like, hooray, right? Like, it should be celebrated. But you pass through reconciliation, so there's no actual policy in there. So everybody's making up as they go along and figuring out what is and isn't in the box and unintended consequences. Okay, so now to answer your question. So direct pay, as opposed to tax credit structuring, is allowed in the bill, right? So for certain types of owners, nonprofits, tribes, municipal, et cetera, right? Like, I don't have to go and find the jerk banker or corporate investor who I love so much. And if you're in the room, come find me because I need your money, right? Like, I love you. I really do. Right. But so like, okay, theoretically, I don't have to do that. I could find, I'm a community oriented developer. I could find a like-minded nonprofit to monetize those tax credits directly. Great. Okay. But in the weeds, I have to do the analysis. Direct pay means, do I or do I not get a step up in basis from my costs to my fair market value? What about depreciation, which I'm counting on for margin? How do I think about the cash residual, right? Like, there's a bunch of things, right, that if you're a tight margin business, because in my case, you're trying to do something good, or just because it turns out you're competing in a world where the commodities are priced where they are, right? Like, that is a prime example where really smart nonprofit, municipal, other leaders could be like, here's how I'd price the capital on a direct pay solution where I'm not going to require, and I'll take out your transaction costs of the bankers and lawyers and Ben Healy, you can cut your salary, and the insurance folks, right? Like across the board. So suddenly that's the solution. Like that's a durable thing, right? That like if someone figures that out, you transform a market and it disintermediates a whole lot of folks who are going to be unhappy, but it empowers the kind of people we want to empower on this stuff. At least me being on the socialist side of my house instead of the capitalist side of my head, right? Like, but that's a prime example, Kate, where it's like no one's figured it out yet, as I've seen in the market, not at any sort of scale that's interesting. But MK and I would be happy if they did, or at least I'm going to speak for them and say, "You got anything?"
Yeah, I mean, part of what we've seen at the Green Bank is that, yes, there's all of these adders, complicated to monetize. You can perhaps do it through transferability, direct pay, that helps bring more customers in. But in order to use that money, you also need to comply with all of these requirements around, are you using American manufactured panels or equipment? Can you demonstrate that you are complying with the living wage and apprenticeship elements of the adders to get that additional benefit? And honestly, from our assessment, like the capital is maybe not worth using the adders compared to our existing. It certainly opens up additional funding, but the question is it usable funding and how do we get there?
So can I ask MK this question then? So here's the thing we try and do when we try and change the world. We're like, here's this thing we're solving for here, and here's the 500 other things, because this is the only chance we're going to get to pass something in Congress for the next X number of years. We're trying to solve all these other things on the back of it as well. Okay, so to Sarah's question over there, I mean, not putting you on the spot, like, okay, we want to change the world and make people's lives better, include marginalized communities, good labor jobs, all the rest, right? Like, are we asking too much? I mean, is it actually possible to do it and make these things hang together?
So the short answer is we need to do it. But does this structure create the sort of the framework to do it? And I would say it's back to Sarah's point that it's exorbitantly bureaucratic. It's complicated. Lots of folks walk away. Many folks in this room, I see friends here, they've got the infrastructure to apply to access the funds. Probably already talking to a handful of folks that got some of the greenhouse gas reduction, money, that $20 billion that came out of the door. Many folks are thinking, I don't want to put in the time, because in the end of the day, it's the same. It doesn't really change things. So, I mean, I think it doesn't do it. We have to do it, but does infrastructure do it? Does IRA do it? Not really. It creates new bureaucracy.
Yeah. So one of the places where I feel like things are really changing are on the labor side and on the manufacturing side. So Kate, I wonder if my gut instinct and my headline reading is correct there. Is that one of the places where we are seeing something that's truly transformational?
Well, thanks for that question. And let me just make a couple of quick general points. So one is that we've seen a threefold increase in manufacturing construction over the past couple of years. And that's tremendous. And a lot of that is around clean tech, right? And part of that is IJA, part of it's IRA in terms of, EV production readiness, battery production, battery recycling facilities, right? All the semiconductor stuff coming from chips. So all of this together has generated a lot of manufacturing projects announced. And last time I checked, there are a number of great websites, including Invest in America. That's, I think, a White House website. But a lot of the state with the most projects announced is actually Georgia, followed closely by South Carolina, with Texas, Tennessee, Michigan in third place. And this, again, it's been a couple minutes since I looked at that data, but essentially it is regionally diverse in terms of who is, California is in there, right? So just a lot of activity happening in terms of construction. And with that comes job creation, right? So our tally is, over 200,000 jobs in the manufacturing. And if you look at just the energy part of that, you can divide that into construction jobs. You can divide that into jobs. About a quarter of those jobs are actually long-term jobs of working in the new plants. So it's a mix of construction, kind of 5-year jobs, and then the longer term in terms of all of the facilities that are being set up. But back to your question, Sarah, what this does is brings a lot of job creation and the anticipation of job creation into a tight labor market. And let's add to that the second trend, which is that a lot of these jobs are going to be operationally new because maybe you're talking about RNG in a natural gas utility, or you're talking about other kinds of technologies in existing infrastructure or new infrastructure, but also a new digital component, right, in terms of getting supply chain visibility into new supply chains, for example, because you're sourcing new components from different suppliers. And there's all kinds of reasons to think about digital technologies that really help essentially achieve efficiencies even as you undergo this change. So then you need a workforce that's really conversant in these technologies. And we actually did a look back over the past 5 years of job opening announcements in the power sector and found that there were, 4 or 5 skill clusters that everybody really was looking for in their job postings. And the top was data analysis, data management, cyber, connected technologies. I mean, it doesn't surprise you, the kinds of things that people are looking for. But we're also seeing that there just aren't enough folks to take those jobs. And looking at the trends in manufacturing, we just actually released an article recently that shows that if you look at what's happening with people going into, for example, associate's degrees that would, train people in the trades that are very understaffed at the moment, there's high need for more people in those areas. We've seen kind of a decline over the past decade. And even though people going through the certificates degrees are going up, it still means that companies in energy and manufacturing are in fact hiring folks who may be a little bit less trained up than they would have been 10 or 20 years ago for these jobs. And so the companies now are forming ecosystems, to use that word, to help do a lot of the training. And so they're working with community groups and nonprofits and municipals and local community colleges to say, how do we have a hand in training up the folks who we really need? Because if we don't get that done, we really don't have the people to get through the transition. If you look at it, not the entire transition, but there are certain areas where we really are feeling that, that lack of folks who are showing up for the jobs. So that is my not so happy analysis of what's going on. But there's a lot of work going on to solve this problem, actually, and a lot of opportunity in trying to solve the problem. But let me turn it over to you guys for a more granular view of that.
Yeah, I mean, Ben, you're going into all of these communities going into all these communities that, as far as I can tell from the statewide Solar for All calls, everybody's like, we're going to use the PosiGen model to reach single family home. Like, what does that mean for you as you expand into these places that don't have solar experience and perhaps don't have a workforce that knows how to install solar? Are you guys doing training yourselves? Are you finding it easy to connect with people that have that skill set, or are you starting to take on a workforce development position as well?
First, yeah, a lot there. But I was going to say to Kate, I love sitting next to you. I mean, I love sitting next to both of you, but you and I are in the same world. Kate's not in my world, and I'm just listening. I'm you're so smart, and I live down in the weeds, and what you're saying, I mean, these perspectives are just super helpful for me, and I'm learning as I sit here, Kate. And what I want to say is any negativity I might have around the in the weeds challenges, and I'm looking at you two, man. It's yes, we're working through the dross, but there is gold here for sure, and the nature of this kind of, whether we call it fully developed or half-assed industrial policy, is there's going to be a bunch of stuff that works and a bunch that doesn't. And outside of this room, I'm just want to be clear, I'm all about it, right? All I would say is positivity, because it's, amazing that we have this opportunity given where we've been, and we got to seize it. And everyone should be aligned on that. To this question though, it's real. I mean, I hope PosiGen is the, single family solution for every state that wants to do solar for all. And, we're going to try our best to win that day. It's easier because nobody else really wants to serve whom we want to serve, which is disappointing, but that is what it is. But on the training front, I'm trying to think if it's number one pain point. If not, it's number 2 or 3 for the company. I mean, the labor market is tight. That's a good thing for people who want jobs. It's not universally tight in the ways in which there's elasticity is very different depending on where you are. But it is incredibly hard to build a workforce that, and we're just in solar, right? Like we're not doing anything all that fancy. We're like, we sell, we put panels on people's roofs. We then have customer service and care. We do field services. And then we have a bunch of folks like me who like, try and keep the thing running with the behind the scenes. We've grown from 200 to 650, 700 people over the past couple of years. That's awesome. Most of the people who work for my company don't know what they're doing. Don't say that out loud. Like the on-the-job training needs are so high across those things that are not actually specialized skill sets, but require an understanding of an ecosystem and how it works together. And that's not being provided externally. And to think about doing that across the country, for me, is fairly terrifying. But as with other things we've done, right? So we'll fake it till we make it. And I think the question with a lot of this, and we're not manufacturers, but are there actual, this is the parts of the industrial policy that aren't working, right? Like, are there, at the federal level, are there structures that are actually helping folks get in? And I grew up in a union household, but like labor unions theoretically want to be part of the solution because they want the members and but like the disconnect between who their membership is and who needs to be included in this transition is, pretty significant. I think they'd agree. Most honest looking folks would. I don't know. What you think?
Yeah, that's why, we've been focusing on, kind of industry adjacent, companies, because there is this gap in training and getting people skilled up to do this work. But I go back to the point I opened with it. This is really catalytic. I think this is a great, IRA is good. It's catalytic, but it doesn't solve all these problems that we all are facing. It doesn't expedite, putting the renewable energy that we know we need. We need it faster. It doesn't expedite putting it in the ground. And that's really the challenge. That's why we've got on the utility side, more in the pipeline than there is the full baseload. That's why we've got, issues where companies are coming in, accessing, from abroad, accessing the resources, but at the same time, challenged with getting the workers to staff up and to grow. So it's a sort of a looming, problem that we haven't really figured out with this injection of money. So.
Okay, your turn. No softball questions. Who's got one? Sure.
Never mind. I'm sorry. I'll pass.
Okay, it was a softball question. Who has a question? Yes.
Hi.
This is Mike.
I'm wondering what the role immigration plays in the labor workforce. It might be like more of a tangential issue, but I'm wondering if if it's just because you can't find people that are interested, or maybe like more Americans are going to college, or just how immigration plays in this world.
Definitely the global policy expert.
Well, I will just say kind of anecdotally that what I have found talking with folks who are doing the training courses, there's a number of folks working, on EPA grants, for example, or working with, utilities and other corporations to really try to beef up a lot of the training courses that are out there. And a number of them are being translated into other languages, right? So I think there's a real recognition that you have a skill set coming in with folks that may not include fluency in English. So how do you get over that in order to enable people to really take these jobs? Because, what we're observing is that more and more people are looking at, who's got the skills, where are they, where's the project I'm trying to get sorted out, and how can I look at the widest possible talent base to bring people in? So I may not answer your full question, but I think there is a real focus on that. Yes.
So there are a bunch of us early stage startup leaders here in the room today. And that was a fairly unsatisfying illumination that there's a deep chasm between IRA and early stage startups. So the four of you, what very specific things would you recommend we do to overcome that?
So I can just tell you from, again, with the boss hat on, our approach with just GGRF and I was talking about this yesterday to some folks. First is to put in. Don't tell anybody, but most of the awardees of that $20 billion got it without any pipeline. They got that money with no projects. They've made up. Don't tell anybody. They sort of concocted, pipeline. It's not completely bogus, but so I would say get in front of them right now. Right now, most I would say all actually, but that might be a reach. But almost all of them are resubmitting their business plans to EPA on GGRF. Take the example of Coalition for Green Capital, CGC. They actually asked for 10 billion. They got 5. You can go on down the list of the awardees like that. OFN, Opportunity Finance Network, the Calvert Group. They all asked for more than they got. So right now they're submitting what they got. EPA said, "Oh, CGC, you asked us for 10. We gave you 5. Come back with the $5 billion business plan." So that creates an opportunity specifically for small businesses and entrepreneurs to go to those awardees and say, "Hey, here's pipeline, here are projects that you should look at." Now, the worst case example of this, and this is I'm not just saying this theoretically, this is what we did. We gave CGC and the Calvert Group about $250 million of projects just 2 weeks ago. And why do we do that? Well, because if they tell us to get out of the room, leave us alone, which they won't. But if they say, so you can put those, you can open those conversations now. There's still time to do that. So that's a super concrete way. And then if they tell you no, you'll be first in line when they actually turn on the lights. Which we're counting on. Hopefully they'll put us into the proposal. So that super concrete like that. And that goes across a lot of this money. I would say a lot of the programs, and there's too many to enumerate, but with DOE, there's just so many windows of opportunity. They've created, I won't go as far as say they're giving away the money, but they're kind of giving it away. So you should just begin applying and tracking that. It's the low sort of hanging fruit opportunities are immense, and without, I don't even know your business, but I would say that applies to many folks in the room can access those resources quite quickly, and then to keep doing that over and over.
Yeah. Variation on that theme. So this year, Posgen is doing, for example, and I'll track it back, right? Call it, deal sizes on project finance of, $50 to $100 million. But last year, I was doing 10 to 20, and the year before, 3 to 5. And so, these trajectories can happen quickly. And by the way, we're not out of the woods. I hope I'm here with a company in 6 months and all the rest in the next 6 months. There's plenty of risk out there. But to put what I believe the sort of fundamental takeaway from the Healy spiel here is a lot of optimism, and key line from me is financing and even policy does not create good projects. Capital follows good projects, and so my advice for any, to the extent it matters, right? The way I think, maybe the better way to say it is the way I think about what we do is you don't have to solve every problem at once. What are the key ingredients to a successful development? And assuming, again, it's sort of a development infrastructure play, but it could be any kind of other sort of set of deliverables to the market, right? What problem are you solving? How do you think about your own capital preservation in an uncertain macro environment such that you can find the source of capital that is appropriately risk adjusted for that moment in time? There is more capital out there looking for good projects and good companies than there are the reverse, right? And so folks should have that optimism for sure, right? And it doesn't mean you're destined to succeed because there's so many things outside of your control, right? I used to describe my job as wake up, 7 a.m. to 2 p.m., get punched in the face by people telling me no, get up off the floor, 2 to 7 p.m. Okay, now I'm going to try and get some things done, right? Like, and you just can't control it, right? You don't know where your yeses are going to come from. But like, focus on what you can control, which is what does it look like to put the right structure together for that capital source? And the thing that's hard and why these kinds of conferences and conversations are so important is it's really hard to see into the other person's black box. So like, here's point number 2. Just be totally vulnerable, right? Like when I talk about people in my company don't know what they're doing, I tell them it's all right, right? I say like the actually most powerful words in business as far as I'm concerned are I don't know, because it shows me you got confidence about being vulnerable and saying I can learn something if you teach me. And so the same thing goes across whether you're on the investor side or the company side, right? And this stuff, it's like, what do I need to do to get your, like, what's your box? Okay. Maybe it's changeable, maybe it's not. Maybe IRA expands it. All right, I'm talking too much.
Okay, so one thing I'll say to the question is I think that you're right. IRA not super well suited to technology innovation. I think that a lot of the R&D funding is coming through the bipartisan infrastructure law in EJA. For that one, you need partners to go after it. But that is really where a lot of the R&D funding is coming from the federal government. I will say, though, to MK's point, you know, there are participants that run the Greenhouse Gas Reduction Fund that are not solely restricted to commercially proven and available technology. And I would look for those partners, in particular, Elemental Accelerator and CDVCA. Both are parties to the, actually like a few different awardees through the National Clean Investment Fund, the NCIF. And they are both trying to think about like, how do they work with entrepreneurs and be the bridge to more traditional financiers like we are? Because we're not going to take technology risk. We will take business model risk. You know, if somebody comes to us with a model like Ben's that says, yeah, we're doing solar, but we're doing it in a new way to access a market that, you know, we want to access, that for sure. There's room for that with under the IRA. But as far as technology innovation, I feel like that's more under the BIL. Kate.
I was just going to ask a follow-up question to Ben, but maybe there's a question in the audience we should take first.
Yeah, I was going to take one more audience question, but if nobody wants, we can listen to Kate's question. Okay, one more, Justin.
Hi. Well, first, actually, one quick note for startups who are looking for help on IRA tax credits, not through Yale, but through a Stanford initiative, Stanford's Lawyers for a Sustainable Economy. I'm with Wilson Asensini, and we have a 3-part free webinar actually on that topic, on accessing IRA tax credits for, you know, ventures, entrepreneurs.
Well, and Wilson's are our lawyers, so.
Yeah.
I didn't know.
And so my question is, so MK, you mentioned the long interconnection queues as being a major bottleneck. So on that note, are any of you focusing on the recent FERC orders and the implications of that on those interconnection queues?
That's a positive question. Yeah, go ahead.
It's unfortunately not a positive question because we build at the distribution level, but that FERC order is awesome. So somebody else should talk about it, but it's exciting.
No, I think I would second that. I mean, yeah, but that, I don't think that addresses the larger problem behind it. I mean, I think that's important, but that still doesn't address that we have this big, huge backlog, right? It doesn't solve that.
Okay, last question.
So Ben, I was just going to ask you to kind of go a little bit deeper on your point about matching capital structure to risk, and if there are 1 or 2 areas there that you find to be helpful to focus on as you're trying to think through that, or a couple of real challenges that you end up having to solve over and over again.
Shoot, I mean, I know we're at time, and I love that question. I'd love to hear what everybody else in the room has to say about it. My quick take is sort of similar to where I was leaving off. Like, people don't understand. Here's maybe the best way to say it. The financing risk associated with the things we're trying to do is not the financing risk that most investors who have traditionally supported what's new and changed the world expect out of a capital trajectory. And therefore, trying to articulate very clearly where you think you fit and where they think they fit is helpful because it illuminates the gaps in the life cycle of what it takes to be successful in this space, right? We're actually not that innovative at PosGen. We're like, hey, those people figured out solar finance. we're innovative in trying to open up the market in a different way. What did I have to learn about that? Okay, a whole bunch of things around credit, compliance, risk, etc., for these kinds of infrastructure investors and how it overlays with development capital and how those two interact. And it turns out I convinced lots of people to give me a lot of money on the development side who had no idea how this thing worked. And then they were shockingly surprised that this thing was hard over here. Turns out that was bad. I would have been better served to commit, right? So like that interplay and that mutual learning is part of the fun and the challenge and why these rooms are important. But I don't have a simple answer. I have more of a like, open those questions, because if you think you live in your little world, at least I think I live in my little world, right? It's remarkable. People specialize and they know how to do their thing. And what'd you call the book last night? Range. StudiQ recommends the book Range for generalists, right? The ability to play across the ecosystem, I think, actually is incredibly important here, because you're trying to change things bigger than each capital niche currently can do. All right, and monologue.
Thank you so much to each of our panelists. This was a wonderful discussion.